A short time ago, the United States military began major combat operations in Iran. Our objective is to defend the American people by eliminating imminent threats from the Iranian regime, a vicious group of very hard, terrible people. For 47 years, the Iranian regime has chanted death to America and waged an unending campaign of bloodshed and mass murder, targeting the United States, our troops, and the innocent people in many, many countries. It's been mass terror, and we're not going to put up with it any longer.
We have an emergency update. Bitcoin just flushed, not because of ETF outflows, not because of leverage loans getting cleaned up, not Jan Street. This time, it was a war. In the early hours of this morning, Israel and the United States launched joint military strike on Iran. Trump posted on Trump's social confirming, quote, major combat operations against Iran. And the crypto market had exactly one reaction: sell everything. Now here's what the data looks like right now. Bitcoin is sitting at 63.6K, down from 68K just 24 hours ago. Total open interest across all exchanges sits at 43.36 billion, down over 2% in the last 24 hours as position get force closed. Funding rates have gone deeply negative, sitting at minus 0.005, which tells you the market is heavily leaning bearish, with shorts now paying longs to stay in their positions. The liquidation number is the one that stops you in your tracks. In the past 24 hours, 518 million in positions were liquidated. The market basically kicked out 153,000 traders. And here's the critical detail: 86% of those were longs. 445 million worth of people who thought Bitcoin was going up just got automatically closed out. Now the largest single order, 11 million wiped in one trade on Aster. Now let's take a look at the heat map. Bitcoin held around 66,000 through all of February 27th. Then around 4:30 a.m. on February 28th, it fell straight down. That's not gradual selling. That's a news event hitting a leveraged market all at once. And look at where we are on the liquidation heat map right now. Current price is 63.6K. It's sitting right at the peak of where long leverage were concentrated. Those positions have mostly been cleared, but above us, from 65 all the way to 70,000, there's a wall of short liquidation leverage stacked up. Now that might be the next zone to watch. Israel's defense ministers call it a primitive strike to, quote, remove threats to the states of Israel. The US confirmed involvement almost immediately. Multiple reports describe it as far larger than last year's June 2025 strike. Iran fired back, missile towards Israel. Now here's the part that matters most for anyone watching this channel. For years, the biggest debate in crypto has been, is Bitcoin digital gold? The idea is that in time of fear, real fear, we're talking about war, uncertainty, people would run to Bitcoin the same way they've historically run to gold, as a place to store value when the world gets scary. Today, it gave us another real test. But what the charts are telling you right now is that when real panic hits, when a US president is announcing major combat operation at 4 o'clock in the morning, the market treats Bitcoin exactly the same way it treats every other risk assets. It sells it first and asks questions later. And there's a mechanical reason for that. Stock market are closed on Saturday, bonds market are closed on Saturday, crypto is open 24/7. So when geopolitical risk hits over a weekend, crypto is one of the only things trader can sell and raise cash fast. That's not a weakness of Bitcoin technology. It's just the reality of when and how liquidity works. Now here's why this conflict hits harder than other geopolitical events. Iran sits next to the Strait of Hormuz. About 20% of the world's daily oil supply passes through that waterway. So we're looking at roughly 20 million barrels a day. If that waterway gets disrupted, even the threat of it, oil price spike. If the price of oil spikes, means inflation goes up. Inflation going up means the Fed has a less reason to cut interest rate. And when rate cuts get pushed further away, risk assets come under pressure. Now, Bitcoin is considered as a risk asset at the time being, and that chain runs straight through your portfolio. Now, here's the historical context. When Israel struck Iran's nuclear facility back in June 2025, oil spiked 7%. Now, crypto dropped hard, and then over the following weeks, price gradually recovered as it became clear that the strait was not actually disrupted. And the standard playbook for market in a geopolitical shock is often sharp initial sell-off followed by a gradual recovery if the underlying supply chain aren't actually disrupted. But here's the difference from June 2025. Iran has reportedly rebuilt its missile stockpile back to pre-war levels. Now this is the second round of strike, and the situation is more escalated going in. Now look at the liquidation map again. The long leverage zone has been cleared, but between 65 and 70,000, there's a massive wall of short positions stacked up. If price recover back into that zone, those shorts gets forced closed, which means forced buying. The question is whether real demand shows up first or whether the macro fear keeps pressure on. Nobody knows the answer yet. Look, this morning a war started and Bitcoin dropped $4,000 in under an hour. The safe haven debate got answered pretty clearly today. When real fear hits, Bitcoin gets sold with everything else. The two things to watch from here: whether the strait actually gets disrupted, that's what turns a short-term shock into a sustained macro problem, and whether those ETF flows hold up when the market opens Monday morning. That's going to be the two things that I'll be looking into. Alright, that's what I have for you guys today. If you feel like I missed anything, feel free to drop a comment. And if you found this video helpful, make sure to drop a like and subscribe. I'll see you in the next one.